There is a basic rule for saving. You put money in the bank and the bank pays you interest for keeping your money. But that's not the case anymore for people living in the Eurozone or Japan. When other policies fail to boost spending and revive growth, more and more central banks lower their interest rates to below zero. CMC Markets chief market analyst Michael Hewson says central banks use negative rates as a last resort.
I think negative rates are an admission that monetary policy has failed in boosting economic activity in the various economies.
Negative interest rates mean banks are charging depositors instead of paying them. Likewise, borrowing becomes cheaper and encourages people to spend more. But economists warn that an excessive period of low interest rates might create some dangers for the economy. Economist Arda Tunca says cutting interest rates to heal economies is not enough to solve the issue.
Unless the real macroeconomic fundamentals are strong enough, negative rates can't and won't be a cure for the weak demand problem. Cutting rates over and over again creates a vicious downward spiral.
And there is Germany, which has opposed these monetary policies from the beginning. Europe's biggest economy wants weaker economies to solve their problems through economic improvements and structural reforms. German Finance Minister Wolfgang Schaeuble criticises monetary policies and says the current model has reached its limits.
If we continue on this path, we no longer need to watch television. The walking dead will overwhelm us, particularly in finance and construction.
In addition to these sectors mentioned by Schaeuble, analysts fear that banking profits might be the main victim of negative interest rates. Hewson says profits of banks are falling as a consequence.
We saw the effects of that earlier this year when you saw a large-scale sell-off in the banking sector because of concerns that essentially European banks and Japanese banks in particular are going to find it that much more difficult to generate profits due to increasing negative rate scenarios.
Time will tell whether more central banks will step into negative interest rate territory and how these unprecedented new models are going to affect the global economy. One thing is for sure though, it's not easy to reverse lower interest rates, so negative interest rates are likely to stay for a while.